This is 100 ringgit. This is 1000 ringgit. All it takes is 10 to make a difference. From 100 to 1000, millionaire to billionaire, and zero to hero. So today's video is on investing. You can also join my Telegram group to stay updated on real estate, finance, home care tips, and more. And don't forget to like this video and subscribe to this channel below. So 100 ringgit or 1000 ringgit may not sound like a lot, especially in this day and age thanks to inflation. So like you, when it comes to investing, I also had these questions. How can I grow my money? Where can I park my money? And is the investment platform and fund trusted? But you'll be surprised to find that there are many reliable investment funds for you to choose from. You don't need hundreds, thousands of ringgit or dollars to start investing. So whether you have 1000 ringgit or 100 ringgit, here are 10 ways for you to invest your money. Number 1. Amanah Saham Bumiputra, or also known in short ASB. It is managed by Amanah Saham Nasional Berhad, ASNB, which is a wholly owned subsidiary of Pemodalan Nasional Berhad, PNB, that owns all of its shares. And ASNB's main objective is to promote savings and investments among Malaysians, especially those from the Bumiputra community. And ASB is a premier unit trust investment meant for the Malaysian Bumiputra. With that being said, Malaysian non-Bumiputras can also invest in one of Amanah Saham Nasional Berhad's unit trusts, Amanah Saham Malaysia. So if you're interested in ASM, I'll also put the links above and in the description below. Then here are some highlights of ASB. In terms of the risk level, it is low risk. Returns are around 4.25% and can be up to 10% per annum. Amanah Saham Berhad's relatively stable returns make it one of the best low-risk investment vehicles in Malaysia. And to invest, all it takes is to start with only RM1 per unit, with no negative returns to date. Then the maximum investment cap is up to 200,000 per annum, and there are no sales or redemption charges. Then number 2 is Employees Provident Fund, or in short is EPF. So EPF is a scheme that is created when you start a full-time job at a government or private organization. This investment pays interest, or also known as dividends, and can be used to fund a portion of your post-retirement life or future ambitions. As an employee, you may already be contributing to your EPF savings through the mandatory rate, but you can actually contribute far more through the voluntary EPF contribution. You can also do self-contribution by self-contribute to your EPF account through online banking, iAccount, or even bank agent in Malaysia. If you are self-employed or you don't earn a regular income, you can also contribute to your EPF account through iSaraan. So here are some highlights of EPF. In terms of the risk level is low. Then in terms of the returns have been about between 5 to 6.4% per annum. Then EPF guarantees minimum 2.5% returns per annum for the conventional or traditional accounts, which is the non-Sharia accounts. For more on EPF and EPF withdrawals, I'll put the links above and in the description below. Number 3 is Private Retirement Scheme, or in short it is PRS. So PRS is like your EPF account, with the only difference is that the investment is optional. It is not mandatory, so PRS is a voluntary investment scheme to help you save more for your retirement. It allows you to invest in authorized unit trust funds administered by third-party PRS providers. So in a way, it's a form of forced saving because you can only withdraw for specific purposes such as housing or healthcare. So here are some highlights of PRS. In terms of the risk level is between low to medium. And then in terms of the returns, investment returns are not guaranteed. It depends on the performance of the unit trust fund. As of this recording, there are top 8 PRS funds that produce annual returns of 7.96 to 11.52% per annum in the past 5 years. Then PRS investment can help you in your tax with the tax exemption. So as of this video, you're able to receive up to 3,000 ringgit in tax exemptions if you invest in PRS until 2025. Depending on your income bracket, you can save up to 900 ringgit in taxes. Then unlike EPF and ASB, there are costs involved in PRS. There is a 3% upfront sales cost and 5% annual management cost. Then number 4 is Real Estate Investment Trust, or in short, REITs. So if you want to invest in property but you don't have the capital to buy them outright, you can consider investing in Real Estate Investment Trust. So REITs are unit trusts founded by businesses that purchases and manage real estate with funds raised from shareholders. REITs invest in a wide range of assets and sectors such as residential, office and commercial, industrial, retail, hospital, and healthcare. The companies are encouraged to give out large dividends since they must transfer at least 90% of their profits in order to be tax-free. So aside from earning from the dividends, by investing in REITs, you can also earn through the capital appreciation. And being in Malaysia, some examples of Malaysian REITs are Sunway REIT, Axis REIT, Pavilion REIT, just to name a few. Then if you're interested in investing in Singapore REITs, some examples are Capital Land Mall Trust REIT, Apple REIT, Maple Tree REIT, Suntec REIT, and more. Then if you're interested in investing in US REITs, some examples are Realty Income Corporation, Prologis, Office Properties Income Trust, Medical Properties Trust, and more. So here are some highlights of REITs. In terms of the risk level is medium. Then in terms of the returns, the return rates varies across the organizations and sectors and industries. So this form of investment is preferred by investors as they have better dividend distributions than conventional stocks, typically between 4% to 8%. Then in terms of the dividends can be paid out monthly, quarterly, semi-annually or annually. And then in terms of the investment time frame, it is advised to invest for the long term to have positive growth. Then number 5 is unit trust funds. So unit trust funds is a type of mutual fund that allows investors with similar objectives to combine their funds and invest in a portfolio of securities and other assets. The joint funds are subsequently invested in portfolios including cash, bonds, deposits, stocks, real estate, and commodities by a professional fund manager. So in Malaysia, to invest in unit trust, you can invest through the bank or in public mutual or through FSM1 Malaysia. So here are some highlights of unit trust. In terms of the risk level is between low to high. The returns depend on the portfolio and funds. Your ROI will typically be in the form of income distribution and capital appreciation obtained from a pool of assets backing the unit trust fund too. So from as little as 1,000 ringgit, the unit trust funds allows you to invest in a diversified, professionally managed portfolio. Then as for the cost, there are sales charges, typically around 5%, and there are other fees like platform fees, annual management charges, and trustee fees. Then number 6 is exchange traded funds, or in short, ETF. So ETFs are similar to unit trust funds as it's an accumulated investment scheme that allows you to invest in diversified underlying assets. So ETFs tend to combine investors' funds to acquire a portfolio or group of stocks, bonds, or other investments. And like stocks, ETFs can provide returns through dividends and capital appreciation. However, ETF fund management monitors or duplicates the performance of a benchmark index rather than choosing specific stocks or assets to invest in like unit trust funds. So unlike unit trust, an ETF success does not depend on a fund manager's forecast of how the market will perform in the short term. So if you are a Malaysian investor or you want to invest in Malaysian ETFs, there are commodity ETF, equity ETF, fixed income ETF, and leverage and inverse ETF. There are also Sharia compliant ETFs or IETF that tracks only benchmark index where the index constituents are Sharia compliant securities. Then if you're interested in investing in US ETFs, examples of US ETFs are SPDR S&P 500 ETF Trust, commonly known as SPY, Vanguard S&P 500 ETF, BOO, Vanguard Total Stock Market ETF, VTI, Invest QQQ Trust Series, Swap US Dividend Equity ETF, SCHD. Then some highlights of ETF are the risk. The risk is medium risk. Then again, it depends on the specific ETF chosen. Then the returns depend on the specific ETF as well. So if you're a new investor or you have 1,000 ringgit to start investing today, you have an advantage with ETF because you have rapid access to a diverse set of investments for a relatively small amount of money to begin with. Then as for the cost, the fees are also on the lower fees, usually less than 1% each year. And in terms of the time frame, it is advised to invest for the long term for positive growth. Then number 7 are blue chip stocks. There are stocks and then there are blue chip stocks. Blue chip stocks are not like stocks or regular stocks. Blue chip stocks are popular shares of corporations with substantial market capitalization. They are reputable and financially sound corporations. These corporations offer high quality and generally recognized products or services. They can withstand economic setbacks, contributing to their long track record of consistent and reliable growth. Then as mentioned earlier, I'm sure we have come across or used or consumed some of the popular products. Whether we like them or not, they are no stranger to us. So in Malaysia, examples of blue chip stocks are like Maybank, Public Bank, Tenaga Nasional, Sime Darby, and Maxis, just to name a few. Then in US, examples of blue chip stocks are like Apple, McDonald's, Nike, Disney, Walnut, and more. So here are some highlights of blue chip stocks. In terms of the risk is high. Then in terms of the returns, the rates vary depending on the company and the market. And blue chip stocks also pay out dividends regularly. The dividends can be quarterly or yearly, for example, which is an advantage for investors who seek consistent income from their investments. Then cost-wise, there are brokerage and transaction fees, of which generally 0.05 to 0.5% will be charged. Then in the Malaysian stock market, there's a minimum fee of 7 to 12 ringgit, meaning if you invested 100 ringgit worth of stock, there's a transaction fee of 10 ringgit. And in terms of the investment time frame, it is advised to invest for the long term to see positive growth. Then number 8 is Robo Advisor. I know there are so many investment jargons. That's why I bought this stock investing for dummies. So if you want to hand over your money to someone and have them or it invest for you automatically, that is the Robo Advisor. So a Robo Advisor is an automated financial advisor offering algorithm-driven wealth management services with little to no human participation. Algorithms are used by Robo Advisors services to automate your investing portfolio. When joining a Robo Advisor platform, a questionnaire will need to be filled out concerning your risk tolerance and investment timescale. The platform will then implement specific algorithms to automatically invest your money, typically in ETFs, and adjust your portfolio in response to market circumstances regularly. So in Malaysia, robo-advisor platforms are like Wahid Invest, Stashaway, and Akru. They are all accessible to many investors, and anyone can start investing in them and through them from a very few amount of ringgit. So here are some highlights of robo-advisors. The risk level is from between low to high. The returns will then depend on the robo-advisor's platform and portfolio risk. Then in terms of cost, robo-advisors offer lower management fees, typically around 1%, which is lower than unit trust, consuming less of your potential earnings over time. Then the time frame is advised to be invested in for the long term to see positive growth. Then number 9 is cryptocurrency. So the question is cryptocurrency even considered an investment? An investment refers to something you purchase with the expectation that it will increase in value or generate income. So this seems applicable to cryptocurrencies. If you had invested $1,000 in Bitcoin in July 2011, it will have grown to around 2.7 million in July 2021. So investing in cryptocurrencies or crypto can take many forms, from purchasing cryptocurrency directly to investing in cryptocurrency funds or buying the stocks of organizations with crypto exposure. And although crypto is lucrative, it is highly speculative, very risky, and very volatile. It is also susceptible to market manipulation, which would likely lead to a sharp downfall in value, in the crypto's value. So if you think you can take a shot in crypto, you can invest through Luno or Tokenize or MK Global or Synergy Dex, as these are currently verified and authorized platforms by the Securities Commissions Malaysia. So some highlights of crypto is the risk. The risk is very high risk, as mentioned earlier. In terms of the returns depends on the cryptocurrency, and then in terms of the time frame, it is advised to invest for the long term in order to see your crypto go to the moon. Then number 10 is crowdfunding. So crowdfunding is another way companies use their monies to fund growth or operations. And there are a few types of crowdfunding: equity crowdfunding and debt-based crowdfunding. So firstly, equity crowdfunding. This refers to when individuals invest in companies in exchange for a share of ownership or profit. Equity crowdfunding sites in Malaysia includes Crowdo, Pitch-in, and Lead Capital. If you are looking for a Sharia-compliant crowdfunding platform, you could also consider ETs. And the great thing about equity crowdfunding is that it allows you to invest in early-stage companies and startups. In the past, only high net worth individuals and companies had access to these opportunities. And when you invest through equity crowdfunding, you generate returns when there's a successful exit. This happens when the company is successfully listed for IPO or initial public offering, or if the company or startup is acquired by another company, allowing you to sell your shares for a profit. The company might also issue you other forms of returns, such as dividends or discounts on its products and services. Then the other type, or the second type of crowdfunding, is debt-based crowdfunding, or commonly known as P2P lending, or P2P in short. So P2P differs from equity crowdfunding, as P2P involves loaning money to businesses in the exchange for receiving interest payments until the debt is paid. With that being said, P2P can potentially provide better returns than blue chip stocks or bonds. Then again, with high profit, it also comes with high risk, as this form of investment is used by startups or new companies. So you need to be mentally prepared if the business were to go south or to go under. So some of the well-known Malaysian P2P financing platforms are Funding Society, Fundastic, and B2B FinPal. So here are some highlights of crowdfunding. The risk level is high, returns depend on the campaign and P2P platform, and to start investing, 1,000 is needed as deposit in your account. Then again, the initial investment varies with each campaign you choose. So to conclude, investing in these investment funds are a great option to increase your income. And you want to take note that whichever investment fund or platform that you choose to invest in, it should be for the long term and for long-term investing. And it also depends on your risk appetite, tolerance level, and investment goals. And for those of you who are struggling to save money to invest, remember, it can always be done over time. You can top up your investment in various investments as and when you have the funds. If you keep at it over time, you will gradually build up a pretty secure and diverse investment portfolio. So it's always good to start early, and remember, it's over time, not overnight. So thanks for watching, and don't forget to like this video and subscribe to this channel to stay tuned for more real estate, investing, finance, home care tips.